we've been investing in real assets here, since 2015 in Europe. We started the business in 2005. An overarching part of the strategy for us, all along the firm's journey, has been to invest in asset classes that are driven more by identifiable supply-demand imbalances and demographic trends, as opposed to other sectors which are more driven by following the ups and downs of macroeconomic cycles. So for the first 10 years of the business, we were very active in the US, and we launched here in Europe in 2015. We've grown the business from a standing start to having four offices at the moment. We're in London, Madrid, Berlin, and Luxembourg. We've scaled the team appropriately over time as the business has grown. We've invested in about 90 assets to date, 5.5 billion euros of AUM under management. We've been very active in student housing, build to rent, and life sciences. We're looking to grow the business over the long term into other demographically driven sectors as we see the opportunities rise. It's been a challenging year and a half, certainly from a macroeconomic perspective. But what's really important to understand is there is a differentiation between some of those macroeconomic headwinds that have arisen and the performance of the underlying real estate itself. What we've seen in the alternative asset classes is, just like we've seen in some of these, tailwind events that have happened over the last 10 or 15 years, things like the GFC, where the alternative asset classes have been more resilient, they've had less volatility in terms of performance. We've seen that trend continue here, in this current cycle. And when we look at our asset classes in which we're focused, we see, continuing, lack of supply, strong and growing demand, which continues even with the headwinds that are happening today. And that's manifested itself in terms of the performance. We see extraordinarily high occupancy in our asset classes, and we see outsized rent growth, which is continuing. So these are all manifestations of a lot of the trends that are key parts of our thesis. We're expecting to see more of the same, frankly. I think the assets are at the real estate level are performing well. There is less volatility. We're seeing the demographics actually improve in terms of student accommodation, for example. The cohort of students that is going to be attending university between now and 2030 is just going to continue to rise as the population itself grows. And I think trends like that, we're seeing it all across the board, really, in many of our sectors. Historically, we've been investing more on the opportunistic side of the risk spectrum. We're closely tracking core opportunities as well now with some of the changes that have happened in the market recently and some of the repricing. We're starting to see really attractive entry prices on a lot of fronts. So we're targeting both the core type opportunities as well as opportunistic. Historically, we've been very active in student housing, BTR, and life sciences. We're going to continue to look at other alternative sectors, places where we've been active historically in the US and have a long track record. We're talking about sectors like data centers, self-storage, medical office, and senior housing. We've been tracking those sectors for some time and just tried to time our entry point in Europe to match when the opportunity is the greatest. So we're looking forward to doing that over the coming years. So we've launched three new really initiatives last year that we're really excited about. The first is in Italy, which for us is a new market. It's a segment that we've been very actively looking at for the last 7 or 8 years. We think it's really attractive from a supply-demand perspective. We just have not been able to find a partner that has a great track record of execution and a shared worldview with us. But we were finally able to do that last year. And we launched this joint venture in December. It's an asset located in Milan. It's 260 units. It's a residential asset that will be targeting both students as well as young professionals. We think that's a really attractive proposition there, and we're looking to roll it out more broadly across Italy and into other markets. Secondly, we launched in the UK last year a new project located in Birmingham, which is an existing relationship that we have with a group called Moda Living, which is a well-established developer and operator of build-to-rent there. The asset itself is in Birmingham, and it's a large project, over 700 units, which we'll be delivering over a couple phases. But it sits at a really attractive location in that it's the nexus of a central business district in Birmingham, as well as being close to the residential area where a lot of the residents in Birmingham want to live. That's great access to restaurants, nightlife, entertainment options from that perspective. So it's a really attractive proposition for the residents. And then thirdly, we launched a couple projects in Spain last year, one in Alicante and one in Madrid. They're both residential assets. we think we're really filling a need there that targets the affordability and kind of the middle class segment of the population there. These assets are well built, well designed, but certainly offered at at affordable rates. So we think it's an attractive proposition there.